Hi guys, welcome to today's video. Today we're going to be reviewing the analysis we made in the previous video and going through the lessons in which I believe they are to be learned, because there are some few valuable lessons there for you and I to learn. So without any further waste of time, let's get to reviewing EURNZD, Nzdchf, and EURUSD. Please make sure that you subscribe, like the video, and go to our Facebook page as well and follow us there for more content. So yeah, let's get straight to it.
Those that made it.
Right, we're going to start off with EURNZD, and if you remember in the previous video, I'm going to put in a clip or a picture, a screenshot of the setup. I believe it was just around the 3rd, on the Friday. That's when I made the video. And today, as you can see on the 4-hour chart, we're going to start on the 4-hour chart, and this continuation pattern has been valid, right? Has been validated, and the market did break, you know, the support level, or rather the resistance level of the structure, and moved up to the high, maybe around 342 pips, but it moved correctively, right? It moved correctively, and it formed another structure, which is rather interesting because of the fact that now when you look at the structure in which it started building, right? Started building a different structure, and let me do this. It started building a different structure, right? Some sort of an ascending channel, yes, an ascending channel, but it keeps expanding. It keeps expanding, and it does so at a double top position, right? Sort of like a double top, right? Just above here, right? At the very high of the previous high, at the top of the previous high, we have a spike above. We have an impulsive move to the low, and this is a clear reversal pattern. First touch, second touch, third touch. At the third touch, we also have this resistance here, and the market moved impulsively to the low. And if we go to the lower time frame, as you can see, we have another structure here. We have another structure here that goes something like this. Some sort of a, perhaps a continuation pattern to the low. Let me quickly do this. There we go. A continuation pattern to the low, right? Sort of like what we identified on Nzdchf previously, right? So for now, I do expect for the next 2 weeks, again, I do expect some drops, but similar to the other currency pairs, we are not exactly sure, but we will see going onwards. And if we go on the 1 hour, or rather on the daily, we see the double top. We see the double top very clearly, right? We see the double top very clearly, and here's the first touch of the double top, and on the second touch of the double top, we now see a bearish engulfing pattern, right? It engulfs the previous 3, 4, maybe 5 patterns, right? So this is a great setup, and for EURNZD, we are expecting some drops. The market did respect our previous setup on the 4-hour again. It did respect our previous setup which is this one, but now it has evolved and became a different setup, a double top and an expanding channel, which is ascending, and it is indeed a reversal pattern. And if you remember, also here's another piece, here's another lesson. Let's go on the 1 hour. Here's another lesson again. If you remember, on my previous videos, the reversal pattern video specifically, we have this kind of reversal pattern taking place, right? Here it is, right here. So we have the move to the high, right? The move to the zone, rather, an impulsive move, and then we have a correction. This is one of the best reversal patterns in trading that I had identified in the previous video. If you go back to my video on reversal patterns, I will have the link down below. So yeah, that will be all for EURNZD. Let's move on to Nzdchf. Right, on the second segment of this video, we have Nzdchf. Again, I'm going to put up a screenshot of the setup in the in which we were talking about in the previous video. Now the market was somewhere around here, and we now, you know, we had a third touch of the resistance level of this structure, right? We're on the 4 hour. So let me zoom in. We had this touch, the first touch, the second touch, the third touch, and we believed that the market is going to drop. It was on the third. Yes, there it is. It was on the third. We believed that the market is going to drop all the way to the low, right? But unfortunately or fortunately, the market again it evolved. There's another lesson that's maybe I'll make a video soon about when the market evolves and shapes into something else, right? And what to do when such things happen. So the market started evolving, and instead of respecting our third touch, on the third touch of the structure, it started building a different structure right here, right? A different structure, maybe a rising wedge, right? So maybe if we could perhaps evolve it, right? Maybe evolve it into something like this. Instead of that, instead of the previous setup, we have something like so and something like so, right? This makes a little bit more sense. So the market did change and evolve into something else, and within this larger structure, we have now a pattern inside a pattern, a rising wedge inside this larger structure right here, this ascending channel right here. And then eventually the market did drop overall for, I believe, 210 pips, 211 pips there about. And if you zoom out, we see, or rather, let's go to the daily chart. Let's go to the daily chart. And as you can see on the daily chart, we have a double bottom. Yes, we have a double bottom, and on the second touch of the double bottom, we do now have a low test, right? A low test. Here's the body, here's the wick. They tested the low and they rejected it very, very hard. So as we go down to the lower time frames, let's go down to the 1 hour. As we go down on the lower time frames, we will have to see what kind of a structure they want to build here. Perhaps they are building a reversal pattern right now on the 1 hour, right? You know, something perhaps I'm not sure, but perhaps something like so. We might have maybe another touch and one more double bottom here. So it's going to be a double bottom inside a double bottom before we experience some buys, right? Before we experience some buys, or right away we could have a head and shoulder pattern, right? Let me draw it. So maybe we could have maybe I'm not sure, but maybe we could have a head and shoulder pattern, this being the head, or rather the shoulder, the first shoulder, the head, and then we have a third shoulder, or a second shoulder rather, before now rising to the high. So yeah, that'll be all for Nzdchf. Let's go to EURUSD. On the last segment of our video, we have EURNZD, and as you can see, we perhaps had, if you remember, we had a rising wedge setup, right? We had a rising wedge setup. I think the third was somewhere here. The third, yes, this is when we shot the video on the third, which is somewhere here. So price was around here. All this didn't happen, but price was around here, right? It was somewhere here. And then now we did identify the fact that we could have a head and shoulder pattern, right? And as you can see, yes, we have a head, we have a shoulder, we have, you know, we have a shoulder, we have a head, we have a shoulder, right? So that's the head and shoulder that we did identify. But what we didn't anticipate to happen is a pattern breaking. So the market did break out of the structure in which we built here, the rising wedge. The market did break, but it did not really make a clean break because it came back and started consolidating. But within the consolidation, it built another structure in which we can identify right now as a continuation pattern, right? So here we go. Here we go. Here's the resistance level, and here's the support level, right? Which then made it even more beautiful as a head and shoulder pattern, because the shoulder is a structure instead of just a normal touch and then drop to the low. And as you can see with this one as well, we have the first touch, we have the second touch, and finally the third touch. And on the third touch, and as you can see, it was a high test of sorts and an impulsive move, an engulfing pattern to the low. If you entered down here, or if you entered up here, either way you wouldn't have been wrong. And now we moved all the way to the low for about, it must be 291 pips to the low, which is fantastic. This one was one of my favorites. EURUSD, to be honest, is one of my favorite setups, or rather one of my favorite pairs that I trade week in, week out. All these other ones I do trade every now and then, but this one is my main favorite one, because of the fact that setups like this, they constantly show up themselves, and it's a beautiful pair, man. And similar to the previous two, we have a double bottom, right? If you go on the daily chart, we see now the double bottom even clearer. We have the first touch, here's the second touch, and on the second touch we have a what's it called again? We have a spinning top pattern, not a doji. This is not a doji, as you can see. This is not a doji. There is some sort of a body, so it is a spinning top, but it is a reversal pattern regardless. And on top of the reversal pattern, we have a large impulsive move to the high. And one of these setups, I'll tell you another trick about these kind of candlesticks, right? Whether it's on the lower time frames or on the daily, I love these kind of candlesticks right here. The reason why is that you can go ahead and backtest this if you want to, as a strategy, as something to add to your strategy, right? This is something that I do a lot myself. So when the market moves impulsively like this, after a reversal pattern or during a continuation pattern of sort, right, what I do is I take 50%, right? 50% of the structure. Let's calculate how many pips that this candlestick move. It was 222 pips. So 50% of 222 must be 111, right? So if we place 111, right, somewhere around here, so this is the middle of the candlestick, right? So what I do is that I oftentimes place my pending orders at 50% of these kind of impulsive moves, these kind of engulfing patterns that move rather whether it's bearish or bullish, regardless. But I place my 50%, right, 50% at 50% of the structure, and wait for the market to retrace and activate my pending orders. So if I had a pending orders over here, the market would have gone down, right, activated my pending order over here and gone down a little bit, maybe place my pending orders, or rather my stop losses, down down here, and the market would have activated, gone down a little bit, and then pulled back, perhaps at break even, because I believe that is where the market closed this weekend. I believe it is around, yes, it is around that price, so around break even of where I would have put my pending orders. In this case, my buy limit, we would have been at break even. But usually these kind of setups, you know, they work out if you place a pending order here. Sometimes they don't, right? Let's go on the 4 hour for me to show you something. Sometimes they don't, and I'll prove it in this case, in this setup again, right? This setup here that we identified, this one right here, right? So as we did identify this continuation pattern over here, first touch, second touch, third touch, and then we have this, you know, bearish move to the low, right? We have this bearish move to the low. Placing your 50%, or rather a sell limit at 50% of this wouldn't have worked in this case, because the market didn't move really impulsively to the low, right? So sometimes it doesn't work. Like I said, you can apply it in most cases, but majority of the time it works, and it works wonders. So that'll be all for today's video. I hope you gained some value from watching it, and if that's the case, feel free to like, subscribe, share with your friends, follow us on Facebook, Forex Tribe. This is indeed a tribe of Forex bosses. Otherwise, we'll see you next time. Peace out.